Welcome to the Traders Help Desk Online video collection. In this video, I'm going to actually show you the power of divergence. Last week on Thursday at 4:30, I did a Multicharts webinar where I went over Apple on a weekly chart where we had called Apple to go down probably to around the level of 533.89. Now remember, this is on Thursday, and I have marked the vertical line here that shows us when we were talking about Apple and that Apple would go down. On Friday morning, if you had been looking at a 30-minute chart, you can see that you had divergence at the opening of the market. We had a gray volume bar here, which immediately told me to actually look at that bar, and this was an up bar closed on the very high. The next bar made a high, and I know it did because I have a blue volume bar, and this gives us the divergence, and it is a divergence right at the ATR. Now, my clients that have been to a seminar know anytime price touches an ATR, it will typically bounce. So not only do you have divergence at the ATR, but you also have the anticipated bounce to the downside. Just by going short at the open of the next bar, which was around 590.65, and closing your position at the end of the day at 572.95, you have made a substantial profit in Apple. That is just a one-day trade. Okay? Now, as you can see, and this is the important thing with volume divergence that most people do not understand, you will think, oh, there's divergence right here. Actually, it is not. When you are measuring volume divergence, it must be on a new high or a new low. So you can see, and I'm going to drag these lines down, this was your low. The opening bar actually made a low. So you cannot start measuring for divergence until after this low is taken out. And as you can see, the volume bars actually are building to the downside. They are not decreasing. Now, one of the reasons that I knew to look for these divergences was the fact that on the weekly chart we were overbought. The ADX was above 70 and had been for an extended period of time, as was the RSI was over 50. Both of these indicators together were confirming that we were probably going to see a pullback in Apple. So again, we called this on Thursday afternoon at 4:30, and just by trading a 30-minute chart on Apple, you made at least about $17–18 of profit per contract or per share on Apple. A very, very simple, easy to understand technique that we teach at our Master of the Trade seminar and our advanced seminar. One of the questions that we get asked a lot of times is, will it work on any market? Well, let's go over and look at the spot forex market. This is a scanner window, and you can see I have a SMA divergence, an ATR divergence, the ADX, and the volume divergence. Now, the typical volume divergence actually will call market tops and market bottoms. That's what we're looking for when we're looking at the basic volume divergence. And the first thing that I would be looking at is what type of short divergences or long divergences do we have here. And you can see we have some on the Euro British Pound, on the USD Swiss franc, on the British Pound US dollar, and on the Euro US dollar. So I can go and I can look at all of these charts, or I can limit my possibilities to the one that has the highest ADX value, and that would be the British Pound US dollar. So I click on it, and then my Forex charts over here change, and I can see that my 240 is right here. This is the divergence that I have had on the 240 chart. And then I go down and I look at the 60 minute. And again, at the 60 minute, remember we're looking at highs. And it has to be a new high for divergence. So when we're looking at highs, we see at the market close, we have just made a new high on the British pound 60 minute chart. We have exceeded the previous high, and we have done that on lower volume. So this is why the THD volume divergence is calling a short position here, because this should go down. Of course, this is one I would be looking at Sunday evening when the market opens, especially with the reversal bar pattern that's over on the 15-minute chart. So these are ways that we can use the scanner and multi-charts to identify potential setups, and then we can go to the actual charts just to verify, yes, price is doing exactly as what we had anticipated it would do.